You're listening to The Real Well Show with Kathy Fetke, the real estate investor's resource.
It used to feel like real estate investing was a man's world, but a lot has changed over the last decade, and I've personally seen it evolve where real estate events would have one or two women in the room, and now I would say it's closer to 50-50. I'm Kathy Fetke, and welcome to The Real Well Show. Today's guest is an example of one of those amazing women with an incredible real estate success story. Monick Halm started with the purchase of a home and progressed from there. She abandoned her career as an attorney and now has more than 14 years experience as a real estate investor, syndicator, and developer. She and her husband Peter own more than 1,300 rental units in 6 states. That includes some commercial properties that she says are pandemic-proof. Monique is also the founder of Real Estate Investor Goddesses, and she's a best-selling author, podcast host, real estate strategy mentor, interior designer, and world traveler. And most importantly, the mother of 3. Monique, welcome to the Real Well Show.
Thanks, Kathy. Thanks for having me.
I'm so excited to have you here because I think you have a really inspirational story. And boy, these days we could use some inspiration, don't you think?
Yes. We were talking about that before we started rolling. We need
we can
quadruple doses of it.
Let's see, we've got three more months of this, and then a whole new year. It'll all be better. But let's just go back to how you started in real estate. How did your journey begin?
My journey began very much by accident because I knew nothing about real estate investing. I'd never been taught about real estate investing. All I'd been taught growing up was that you should go to college and then grad school and become a doctor, lawyer, professor, or engineer. Like, that was it. Get a good job. The only thing I was ever taught was buy a house. That's the only real estate advice I got. Buy a home, and you put some money in a 401k, you work till you're 65, 70, you get a gold watch, you retire, play golf, you die. That's the path. And so in 2005, I went to go buy that house. I was working as an attorney, and
So you did at least follow the rules, and
I did. I totally followed the rules. I was very dutiful, and I was a good girl, good student. I went to college. I went to law school. I was working in a big law firm, partnership track. Completely miserable, but I followed the rules. I hated my life. I think at one point I ended up in the ER. And when the doctor told me that my appendix had ruptured, they don't know what causes it. I'm sure it was stress from the job.
Wow.
And so my appendix ruptured. The doctor told me that I would have several days in the hospital. I was in the hospital for 9 days. And he said I'd have at least 30 days afterwards to recover. My first thought when he told me that was, oh, thank God I don't have to go to work for at least 30 days. And then my next thought was, I was like, wow. I did not realize, how unhappy and miserable I was until that.
You were happier being sick than working.
I was. It was like, oh my gosh, I have at least 30 days away from hell.
Yeah. Wow.
That's how
I don't think you're alone in that. No, my sister said the same thing when she found out she had an illness. She's like, oh, I get to
Thank
not
God.
No. Yeah, that's enlightening. So then what?
So I went to buy a house, and I live in Los Angeles. You're here too. You know how expensive it is. But even back in 2005, a starter home in a semi-decent neighborhood was upwards of $600,000, $700,000. Mm-hmm. And I couldn't afford that by myself. And a friend of mine who was in a similar boat suggested that we buy a duplex together. The original idea was we'd buy a property with 2 equal sides, but we ended up finding this beautiful old Craftsman that had a larger unit in the bottom level, a 2-bedroom unit up top, a converted garage that was another 1-bedroom, and then so we each took a bedroom in the larger unit, rented out the upstairs, rented out the back house. We even rented out our basement, and we were house hacking before I knew that was a thing.
Yeah, that's how I got started. Oh, wonderful. Okay.
Yeah, I was like, this is so great. Right? And tax benefits. This is awesome.
Using Craigslist like we were?
Did I use Craigslist? So the first the first few, we actually knew them. So we just sent out emails to our friend circle
Yeah.
and filled up our house that way. And eventually we got into Craigslist, but at first we were kind of like this commune type place with
Yeah.
all of our friends there and who were renting from us. It was awesome.
Oh, that's
Yeah.
great. So then you sold it, or what did you do with that?
Well, actually we still own it. And then
Wow.
when I met my husband, he had a duplex, and we got a single family rental together. And after the market crashed, um, we started flipping houses when houses were on sale. It sounds like that was also intentional, but it was. I actually I got fired right before in 2008,
I was
before the
just going to
market
ask you
crashed.
what happened to the job. Okay. What?
So, you know, I'd gone to different places in law. I left the job that was killing me with the appendicitis, and I went to another big firm. Then I went to a little firm, and I was at this little firm working very hard, and I was pregnant. And a week after I told my boss I was pregnant, I was like 5.5 months pregnant, and I just popped out. He called me into his office. I thought I was going to get a bonus because I've been working so hard, and instead he fired me, which was like
Shocker.
shocker. And I was like, "Can you do that? I'm so I just told you I'm pregnant." Anyway,
Oh,
so
man.
he I got fired, which was not welcome news, but it was a blessing in disguise.
Hmm.
And because I probably would have stayed, even though I really didn't like it and it was pretty miserable, but I would have stayed because I was the main breadwinner and then there was another mouth to feed. And so he did me a favor. I didn't feel like that way at the beginning, but at the end, now I'm happy. So I decided, because I was so pregnant, that I would wait until after I gave birth and I had a short maternity period before I went to find another job. And then my daughter was born in late August of 2008. So within a month, the economy's in free fall.
Hmm.
And within 2 months after that, my husband, Peter, he had a graphic design business at the time. His business was down 90%. So
Oh,
it was a really challenging time.
yeah.
But luckily we had a little bit of real estate that helped keep a roof over our heads. We did do a short sale. And we sold one of the properties, and with profits from that one, we started to flip. Partly because that's all I knew to do, like renting and flipping from those HGTV shows. I was like, I'm sure we could do that. That looks fun. And so we started to flip, and we did that until 2000 or 2015, when they were not so on sale, and it was a lot more challenging. And then I learned about syndication.
All right.
Yeah.
Okay. So when you bought that first house and, the house hacking, what did you have to overcome in order to, take that leap? Like, was it scary for you, or was it natural?
It wasn't scary, I think, because it was it wasn't so thought out. I felt like it just sort of fell into it. We were
Yeah.
looking around for a house that was, that had the two equal sides, and we found this house and went, "Oh, we really like this one."
Hmm.
And then we ended up, we were going back and forth. Do you take the smaller upstairs? Do I take the smaller? Let's just each take a bedroom. Oh, we can rent it out. Oh, let's do that, right? So it's just
I love
like,
what you're saying, is that in some ways you don't have to overthink it, but what you did
yeah,
do was take action.
yes,
And so I would say, for anyone who is just looking at owning property and that first piece of property, and it seems like a really big and scary step, to just take a step. And that might be meeting with a lender and understanding what that process is like, because that can seem confusing when you meet with a lender and they kind of break it down for you and show you what your payment's going to be and what your down payment needs to be. And in some cases, it's very small. If it's 3%, sometimes even less, that's step one, is, can I even do it? Can I even qualify for a loan? And then step two, you started looking. I mean, that's how my 24-year-old daughter got her first property. And now she's got a rental and she's cash flowing $1,000 a month. It's incredible.
Amazing.
But she, the scariest thing was meeting with the lender. She left that going, well, that wasn't that bad. And in fact, my payment's less than what I'm paying in rent, which is amazing in California. But interest rates are so low that, people might find that's true for them. So then, let's see. So you got into syndication, and what are you syndicating?
So we are syndicating right now mostly multifamily and then industrial.
Industrial, okay. And for anyone new to that term, syndication means that you raise money from investors, but you manage the assets. So at some point, you kind of run out of money, right? We can only buy so many deals. Most of us don't have unlimited funds. So I remember, and I've said this on past podcasts, that when I had a mentor early on, and I sat with him and said, okay, we've got this much money and we can buy this much property, but then what? How do we get to this goal? And he kind of, smiled and said, well, that's when you become a real investor, when you don't have money, So being able to raise money from other investors, but generally you have to have experience first, which you did. So industrial, tell me more about that.
Sure. So I also want to say that the syndication allowed us to do more, not just, it allowed us to invest because we were at this point self-employed. We had money in the bank to buy. We were buying our houses outright when we were flipping. So we had cash, but our tax returns looked so low that, I couldn't refinance my own house, but I could do a $10 million loan for a syndication, right? So it was, in certain ways, it just allowed me to go a lot bigger. There was a lot more ease in it for me than there was even just doing like the residential and the smaller in my own name. So that's a big reason why I got into it in the first place, just because we were really stuck. But then also, so with regards to industrial that you asked me about, mostly what we're doing right now is we are doing this type of property, type of deal called a sale leaseback. So there'll be a company that has a property, a facility that they need to get equity out of. So we've done, so far this year, we've done 2 of them. One was a frozen pie manufacturing company, frozen pie company. So they white label frozen pies. So there was a cold storage facility that they built, and they wanted to get the equity out, and they couldn't refinance and get out what they needed. So they're selling it, and then they lease it right back to us. And they become our tenants. And now they're our tenants. We have a 20-year lease, built-in increases, rent increases, triple net lease. And the play is in 3 to 5 years, we sell it to an institutional buyer. They love these deals because you have a steady tenant with several years of rent history.
Yeah.
And then with still 15 to 17 years left on a lease.
Yeah.
And those are great little deals, very similar returns to multifamilies.
Interesting. Plus but maybe you get a free pie to go with it. I don't know.
Again, and we have an organic baby food, one in Fresno as well.
Oh, that's wonderful. Brilliant.
Yeah, they're great. They're great little, they're great deals because they're companies that we know are doing supremely well even now because
you're sitting home eating pie. I mean, I know I did all last week.
Frozen foods are flying off the shelves. So,
yeah.
And there are more babies.
Let's talk about what a triple net lease is and what kind of return you can get from it, because it's a bit of a safer investment, and generally long-term leases with triple net lease, it's a little bit lower return because it's safe. But is that the case? I mean, what can people expect? First, what is it, and what kind of return can people expect?
So triple net leases are great because in addition to paying rent, the tenant also pays the property taxes, they pay insurance, and they pay all of their maintenance. So they're basically paying everything with the exception of any debt service. That the debt service is on us. That's our debt that we take on for buying it. But other than that, they pay everything. So that's really nice. There aren't any surprises. So if there's a something happens, they're gonna take care of it. So they're very long-term leases. These types of commercial tenants, they will be there for as pretty much as long as the company's there. And in fact, with these particular deals, these companies had built those facilities just for them. So they're exactly what they need. They don't want to go anywhere. So unless their company's going out of business, they're not leaving. So it's a very, very steady investment. And you might think that because it's so steady, it's going to be a very low return. But for our investors, they're getting 8 to 10% cash on cash returns. So that's their yearly cash flow. And then by the time we sell, the returns are not total cumulative annualized returns in the high teens, maybe up to like 20, 21%.
Okay, wonderful.
Yeah.
And then now we met on the Real Estate Guys cruise, and it was so fun to meet you. And at the time, I think I was one, maybe even the only woman on the stage. I'm not sure, but I think so. But it's the Real Estate Guys, so we'll forgive them. Haven't changed the Real Estate Guys and gals, but I think, you took notice of, why there's so many great female investors. Why aren't they out there? Why don't people know who they are? And so you started an organization to help women, really specifically to help women understand investing. So tell us about that.
Yeah, so I started Real Estate Investor Goddesses in part because I would go to these events, I'd look around, and every once in a while I'd be lucky to see you on stage. And then otherwise, there were pretty much no women on stage, and there were very few women in the audience. We'd be lucky if it was 10%. And I'm sure
it's true. I mean, I think
when
I started, it was less than that. It was maybe 2%.
Yeah. I remember my first event I went to, and there were 120 people in the room. I think there were 8 women there, but 2 of which are working in the back. So it was there or none. There were so few. And then I joined this high-end real estate mastermind. It was me and 19 men, and there were no women. And in between being a lawyer and doing what I do now, I became a coach, and I was coaching women around abundance, money. And so I was already working with women around money. And it came to me, I was in a hotel gym after one of these conferences. I was on the elliptical, and it came as this divine download to start Real Estate Investor Goddesses, and my mission to help 1 million women create financial freedom through real estate. And not the how. I had no idea about the how. Still figuring out the how I'm going to do that. But the what of it came like that. And I went, yes, I need to bring women into this room, because real estate investing is perfect for women. It is flexible. It's perfect for having a family. It'll help erase the mommy tax and the income gap and the wealth gap and it's just, and we're really good at it too. When we actually get into it, we tend to have better results even than men. But I went home and I started Googling, and I couldn't find anything really that was speaking to women about real estate. There have been more since I started. I'm really excited about that. But at the time, I remember there was one that's commercial real estate women. And I went, oh, okay, maybe this is for me. And I went there, and there were all these women, but they were brokers or vendors, interior design. I was the only investor there. There was no other women investors. And I found one other group that helped women wholesale, but there was it's a very blue, wide open ocean. And so I started this group to get women in and to inspire them, to show them that this is possible for them.
Yeah, and I'm just so thrilled. There's more and more groups doing this. And even at our events, I started to see some wives start to attend with their husbands. And and then they would, show up and dress up, and then they would be wanting to sit together and discuss the financial plan. Whereas, it's amazing to think that just when I started 20 years ago, well, no, I started doing loans about 17 years ago, and it was just the men. It was like somehow it was the husband's responsibility to manage the finances, and as much as women wanted to, maybe I don't know, it just wasn't the way I was raised. My mom wasn't involved in it either. That's a lot of pressure for men. It's much better to do it as a couple, right?
Yeah.
Because generally, there's one person who's more analytical and one person that's more, like you were saying, you got to just jump in and you figure it out. And together, great things happen when you bring those two personalities together.
Yeah, it's great when you can do it as a couple.
Yes.
Then there are also a lot of single women, divorced women, never been married,
right.
moms, and there's, and I don't think that you need to let the man do it, obviously, but often there's no man and that's there, and but
yeah, that's right. You don't want to be
and still do it.
I mean, just even my mother-in-law, when my father-in-law passed, she was like, had no idea what to do with the finances.
Yeah.
And he hadn't, really partnered in it with them. So, but yeah, right. I mean, I think single women were one of the fastest growing homeowners for a while. So yeah, well, Monique, I'm just thrilled at what you're doing, and you've got a seminar coming up. So we'll have it's kind of a virtual, we usually do it live, but of course everything's changed, so it's virtual. So we'll have the details in the show notes for that. I'm excited to be participating again this year.
We love having you. You're always a highlight of the event.
Well, thank you. And this is surf week, man. We've had incredible waves, so I didn't have time to do my hair today. I will be dressed up for your event. All right. Well, any last tips for our listeners? Things that you've learned over the years?
What have I learned over the years? Probably one of the most important things I've learned is the importance of having the right team. And because I've had the wrong team, that's not a good idea. It's very much a team sport. So really, having the best players, and then the importance too of education. It's because it's not, what you don't know can hurt you, but also sometimes you don't even know what you're missing because you haven't learned about it. The more I've gotten educated, I go, oh my gosh, I could have invested this way, I could have done that. And it was through these accidents that I ended up here. And so I think it's awesome that you guys that are listening, you're learning from Kathy, who's so brilliant and brings, great people here. I'm probably speaking to the choir in terms of getting educated and learning. But I find for me, that's the education piece and making sure I have the right team that have been the most important to my success.
Yes, absolutely. Get educated, learn from those who have made mistakes so you don't have to. I agree. Well, once again, thank you so much for being here. It's been a pleasure watching you grow and do so much for women to bring them up and be in control of their financial life.
Thank you. Thanks for paving the way.
Aw, appreciate that. All right. Well, I'll see you soon, hopefully.
Yes. Looking forward to it.
Thank you for joining me here on The Real Wealth Show. If you want to learn how to be a savvy real estate investor, just go to realwealthshow.com where you'll get lots of online education for free. All you have to do is sign up as a member, and membership is free. Again, that's realwealthshow.com. I'm Kathy Fetke, and thanks so much for joining me here on The Real Wealth Show.